Well, it's today's rebound. Is it a sign the correction is over? Sanders Financial Management CEO Emily Sanders joins me to talk about why she expects another leg down and when we might see the numbers that we had before the big dip. That's next on Market Movers. Well, the market is rebounding today, but not everyone is convinced the selling is over. Our next guest says that we could see the market take another leg down. Joining us to talk about it is Emily Sanders. She's president and CEO of Sanders Financial Management. She comes to us from Atlanta, Georgia. So, Emily, is there evidence that the worst of the selling is over? You don't think so?
No, I don't, Monica. The action today is very promising, and it's certainly the kind of rebound we would hope to see after a week like last week. However, last week was not unexpected. The market was down 3 to 5% in the U.S., more in China, of course, that ostensibly triggered the global meltdown. But that was really healthy because the emerging markets were way too overheated.
And we haven't seen what officially people call a correction just yet, which is a 10% decline. You think there might be more to come, but when would that be? I mean, what do you think would spark that?
Correct. Really, there's almost any excuse to spark a correction. The Chinese changing their capital gains rule was an excuse. Alan Greenspan's use of the R word was an excuse. The truth is that the global markets are just so interrelated that really anything can spark it, and we don't know what that will be. But based on the human psychology of fear and greed, and we started to see some fear come into the market last week when the hot money was unwinding their positions, we would say that there will be another leg down, perhaps next month, and by the spring or summer, we should be back to positive territory firmly.
Let me ask you about the fundamentals of this market, though. I mean, are there enough in terms of the fundamentals to really support, buoying this market at this point, or even a little bit move higher as we saw today?
Absolutely. The U.S. economy is alive and well, not just because Secretary Paulson has told us so or Ben Bernanke has told us so, but unemployment is low. Growth rates of the GDP are between 2 and 3%. Corporate profits are still quite healthy, and balance sheets are looking good. So really, even productivity of workers is continuing to be strong. So the U.S. is the driver of the world economy. And yes, there are other countries nipping at its heels, but we will be the driver of the world economy for some time to come.
Let me get your sense, though. The worries, obviously, of last week, even into this week, come from the subprime mortgage area. That story may not be over just yet. What about that? How concerned are you about that? Do you think that's going to spill over and sort of, ruffle the feathers in the broader economy a bit?
Well, I do believe that housing and inflation are the two big risks in the U.S. economy, and housing is undeniably soft in the U.S., but really only a small percent of borrowers are subprime. And what's happening is that a subprime type of borrower who probably shouldn't have gotten a mortgage in the first place will probably pay his or her car payment before they'll pay the mortgage payment, so they get in arrears on the mortgage because they need the car to get to work, but if their house is foreclosed, they can always move to an apartment. So we really feel that the housing market will bottom in 2008. There's still more to go, but it's not going to derail the entire U.S. economy nor the world economy. And housing, real estate is so strong in other parts of the world, Europe, Asia, India, that really the U.S. market is good. It's not great for housing, but the U.S. consumer still has disposable income.
Okay, Emily, thanks. Appreciate it.
Thank you, Monica.
All righty.